Oil is surging, the ASX Energy sector is screaming reversal. So have we just witnessed the beginning of the mother of all opportunities in the energy sector? That's why tonight we are drilling down and highlighting which ASX Energy stocks have just arrived and why now you could be staring at the best opportunity in a decade. As always, we'll highlight key levels and setups to watch for. We'll also break down why Santos's recent takeover could be a massive buy trap for investors. If you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian stock market show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me is Wealth Within professional trader Janine Cox, alongside Wealth Within graduate and Blueberry Markets head of premium sales Zoran Kresovic. Good evening, everybody.
Good evening. How are you?
I'm great. How are you?
Glad to be back in the hot seat.
Glad to be back. Yep, it's nice and warm. Zoran, welcome back again.
Thank you. Thanks for having me again.
Yep, it's going to be a great show tonight. Obviously, we're going to get into all things energy. So let's get straight into it. Oil is flying at the minute, as mentioned, and the energy sector is showing serious signs of buyer activity. So is it now finally the time for the energy sector to take off, Janine? And I want to start with you first, because obviously, you know, war is breaking out. That bodes well for oil. Oil's up. The energy sector is up almost over 20-30%.
Yep.
So now is the time.
I mean, there is a serious issue in terms of the supply and demand curve that we've got. And there's a big question mark over it. The market's trying to second guess what's going to happen. And so this creates huge opportunities, I think, for investors who are savvy to get into some of these energy stocks, or at least be prepared and wait for the right time. You know, now is the time to get into some, but there are others that will set up in the second half of the year. So you've just got to be watching this space. Yeah,
and I mean, it's such an exciting sector, Zoran, because you're talking about one of the most volatile sectors on the ASX, huge growth opportunity, coming off serious corrections. But now, I mean, you know, give us some thought on, obviously you cover off gold, oil, with these markets starting to move and the whole demographic around what is happening right now. Yeah. Ripe for the picking?
I mean, it could create a lot of opportunity, definitely. I agree with you. I think energy sector over the past 52 weeks has been the worst performing sector in the overall market. Like if you have a look around ASX, so I think right now it's around 6.5% down for the past 52 weeks. Over the last week and month, it's been doing really, really well. So I think there might be some reversal on the horizon, and there might be some great opportunities, yes.
Yeah, it's exciting. It really is. And we're going to get into some amazing charts tonight for you. So let's go straight to that. All right. So, I mean, one of you can start. I don't mind.
We've got...
I'll let ladies first.
Oh, really? That's nice of you. Well, we've got the energy sector to start first, which looks a little bit like Woodside. Funny that.
Yeah, it does.
You're supposed to laugh, Zoran. Why so serious? All right. I mean, I guess it is a serious business, isn't it, we're into here. So first of all, I'd like to have a look at, and someone's played around with the order of these here just to make everybody laugh, but we can see here that there's a really interesting level of support for the energy sector here. And we can see that it's bounced off that level. We've seen the oil price rocket up, and a lot of the energy stocks follow suit. So it looks like, you know, what we're seeing here, given the degree of this bounce, it looks like the start of a run, which we haven't seen for such a long time. I mean, look at these trends here. There's some beautiful historical trends for the energy stocks, and this is just a standout one. You can get a trend line down there. It looks really good to see that we're actually breaking the angle of this trend, which is so important coming through here. What do you think?
Very powerful move as well. So very similar in rhymes with the move in 2019, 2020 when the COVID hit and crude oil actually went into a negative. So I think what we can see here is a lot of exhaustion to the downside and a strong reversal. And this weekly bar, I believe, or actually this monthly bar, my apologies, is looking really strong, and I agree, it's breaking a downtrend line. It could create quite a bit of opportunity in the market right now because, I mean, everyone's been talking about, you know, sectors such as tech sectors in the US and locally here as well. But at some point, obviously, the rebalancing and the values, we need to look for the values in other parts of the market as well. And this could be a great opportunity right now.
Yeah, now on that point, I want to ask you both this question because obviously this latest move is driven by some serious catalyst right now. So the question to me anyway is the volatility partly due just to the catalyst that is happening, or is this a real serious turnaround when you look at that price chart? Because I say that when we go back to September last year, China released a bout of stimulus. The materials sector shot up for 3 or 4 weeks, very much like what we're seeing now with huge volatility. But then the market did nothing after that. So is this purely just volatility coming from a specific situation for the market to then come back and reverse, or are we seeing real signs from what you're seeing on that chart that a reversal is here to stay? And maybe you can even add, we're going to get into later about the whole Santos issue, but...
Look, I think the reversal is here for long enough to create opportunity, and that's really the point. Is it here to stay? Well, you know, do we want to try to sort of forecast 3 to 5 years out? I'm not really into doing that right now, given that everything is in a state of flux at the moment. But what the market is basically saying is that we don't think that this is just going to happen overnight and fix itself right away. This is something that could happen over many months. And then, you know, we know the market's always factoring in what the information 6 months ahead. So this is telling us that, you know, we're looking at months. We're talking months, not just a few weeks.
Well, it's a great point, obviously, especially with the players involved. I mean, you've got Iran, who controls a lot of the, I guess, supply going through globally. But let's get to an RRG chart. I know this is a special chart we do often bring out on the show. So it's quite interesting to see which stocks are lining up for opportunity.
Yeah, this is fantastic, isn't it? And I mean, you guys touched on some of the energy stocks yesterday in your market report, which was really informative, I'd have to say.
Oh, thank you. Yeah.
And I don't listen to Dale's normally, but, you know, we've got to rub that in a little bit, don't we? Now, we can see here that some of the stocks are actually starting to push up in that lagging area, and that most of the energy stocks have been in this space. So that sort of plays to what you were saying before, Zoran, about this sector being, you know, for the last year, it's been the big one that's been lagging the most. And now these are sort of looking like they're turning back up to make a comeback so that everything could rise to the top. But which are the ones that potentially could be the best?
Yeah, I guess it depends. Again, it always depends, right? Like, what are you looking for? Are you looking for growth, or are you looking for income as well? So, you know, how are you constructing your portfolio? Are you looking for more active trading, or are you looking for a long-term view? So, you know, I think the sector overall will be led by most dominant stocks, or you know, within the particular sector, or with the biggest market cap. So the likes of Santos and Woodside, these are the stocks that are probably going to provide a lot of opportunity. And then obviously that generally gets followed through by small caps and mid caps as well. But you know, to go back to your question, what you said before, Phil, I think we have to look at a kind of two different aspects here. So if you're looking at crude oil in particular, then I think, as Janine said, it's going to provide probably opportunity over the next 3 to 6 months, because market always discounts everything and looks at it in the future. But if you're looking at gold, and I think that's something that you want to focus on a little bit later on, that's already been driving the market for a long period of time. So, and that's predominantly on the basis of what we discussed, I think, a couple of weeks ago, interest rates and macro views. But crude oil right now, it's a pure supply-demand issue that's happening. Markets are getting nervous. Everything that we're getting in terms of the news flow over the past 24 to 48 hours, it's not looking good. If anything, it looks like it's going to continue to escalate further. And we might have some major disruptions around the globe in terms of the actual oil supply. And as we know, that could potentially drive price to actually continue going up and drive the sector to actually to head higher as well.
Yeah, well, that's a good thing with me.
Pedro's been saying for ages, hasn't he? And poor Pedro, he's not here to support himself. But don't worry, I'm not going to pick on you, Pedro. I know you've got a lot of supporters out there. You have been saying that the energy sector is going to take off, and this is the start of it. And I know that he's excited about it as well.
Yes, he is. And I mean, look, it's fitting that we are making this show today about the stock. So let's get straight into those energy opportunities there. I know there's a few. Janine, start us off.
Now, you've handpicked a few of these, haven't you?
I have, yes.
DOE is one that you've picked. And first up, you decided to go for Boss Energy.
Well,
any particular reason?
No, I mean, look, they're the opportunities out there on the market right now. We're going to get your obvious expert opinion on these, but it's exciting, as mentioned, because, you know, these opportunities, when they come fast, as Zoran said. So right now it's about, you know, giving that advice to show are they ready right now?
Yeah, and this one has taken off, so it is looking interesting. So let's go and have a look at the chart. So as Phil rightly said, there are some really exciting opportunities here. I don't necessarily get excited about uranium type stocks, but this one does look good. So that's why he's having a chuckle there. So you can see that there's a serious level of resistance from a historical high there. But look, every time this stock has made an attempt to get through that level, it seems to have done it. And except for where it came off that high, it pulled back, tried to push through it and then came back again. But now we're through it again. So I think it's looking particularly good. Given that it's been up 2 months there and we're seeing an inside bar, it looks like it's closing to the top at the moment. I would like to see it actually pull back, but it may not. Ideally, come back to test this line here, which is a historical level in the past, and we always like to see those tests, but we're seeing this sort of rising consolidation that's happening here. A little bit more consolidation just to shore it up would be important to firm up the upside, but it does look like there's plenty of upside there, Phil. So just having a look from the current close to the high there, it's about 40%, which is really good. Yeah. So, yeah, I mean, look, from technically, looking at the chart, I do think it looks good. I would prefer to see it actually test these levels at around $3.30, $3.20, because it's sort of tried to a couple of times, but it's just holding up really well at the moment. But, you know, someone who's got a short-term perspective, short to medium term, might be interested in this one.
So I've been trying all year to get you to say uranium looks good, and finally she said it. So there you go. But
no.
you know, to me the interesting part is obviously you know, topics like lithium, uranium, they get spoken of in the media, and I know years back they were spoken of quite a while. But the share prices were going south, and that's when a lot of people were talking.
Well, that's when you were talking about them and saying that we need to be looking at this area.
Yeah. And
for investors and traders.
Absolutely, and that's when a lot of, if you will, non-students were coming and saying, oh, what do you think of this? What do you think of lithium? And when you look at the chart, it was going south. It wasn't opportunistic. Now, the flip side is no one's speaking or really from the circle's students.
That's interesting, isn't it? It's like the media are not focusing on this as much now, are they?
And we're seeing the reversal. And to me, I just wanted to highlight that point. That's why it's so important that you do go out there and look at the charts, because it's not going to be shown in mainstream, and right now those moves are happening, and our students are out there getting on them, so it's good to see. And
even just to top it up, like when it's spoken about, it's probably too late anyway, because it's all over the media, and you know, the train is already gone, so you got to obviously find an opportunity early on.
Yeah, and I guess that's one of the reasons why, you know, I'm so for what we teach, because it actually allows you to do the forecast, set it up and be prepared, and actually watch it and see all the signs as it's unfolding.
Yeah, you could know all the fundamentals, but at the end of the day, if you're not following when the action is happening, well, you're going to miss the boat, right? But all right, next stock.
All right. Next stock is NextGen Energy. Now, this one's a bit more volatile. Zoran, did you want to talk about this one?
Yeah, it looks very volatile. I mean, the length of the bars, even on monthly chart, they look quite long and exhausting, if I can say it that way. Which begs a question, you know, what, you know, in terms of like, how does the stock behave and so on. And I generally like, when I see these long bars on monthly chart, I like to break on to weekly chart as well. And I can see there's actually quite a lot of gapping on weekly chart as well, which makes me think that, you know, the price fluctuates quite a lot, and trading something like this can be, you'd probably need a bit of experience to actually trade something like this. Just looking at the overall, looking at the overall price. I mean, in terms of the PRP tool percentage
but look at
price range,
look at how fast it goes when it takes off. I mean, it'd be a good short-term trading stock, wouldn't it?
Well, that's a good question, because, and I'll get your thoughts on this, because yes, your experience is needed, but when you look at that, really there are certain ways to trade it. So when you're focusing, is it more of a short-term way to trade this stock for growth, or is it more of a longer-term play? Because you could potentially wipe away a lot of that noise going bigger picture, and a lot of people don't do that when they look at these stocks. They think, I've just got to get the quick 15, 20% when it comes. Thoughts?
Yeah, I would agree with that, with your view, definitely, but I'm just of the view as well that, like, just because it goes up quite quickly, it can actually reverse quite quickly as well. So, you know, you'd want to make sure that when you're trading it, you got some really good rules to protect yourself.
I mean, I guess we like our students to have some decent history so that you can properly understand how the rules perform. And I mean, with this one, it has got the minimum, I would say, which you could use to test the stock, given that it has had some periods of sideways, upwards, downwards. But, the certainty in your rules comes from being able to confirm what's happened in the past. And with this one, I think whoever trades this would have to be quite nimble in their trading ability.
Are you concerned at all about the liquidity? I mean, given it gaps a lot, does that look like a liquid stock to you?
Look, no, I'm not actually concerned, even though it does gap a bit and there is some changing volume. Right now, the volume looks like it's starting to improve. And I think this is probably okay for someone who's experienced and has done some study and understands how to put a whole plan together and how to test it. Yep.
Fantastic. All right, next one.
Next one is Whitehaven Coal. Now, this is one that I do like, even though, from a chart point of view, from the environmental argument, well, there's a lot of discussion that we could have about that on ESG, but looking at the chart, this is a critical level for this stock. It's still pushing up, and we can see that we've been waiting for this commodities side, other than gold. We've been watching for a lot of the commodities material stocks to take off, right? And so with oil doing what it's doing, we could all of a sudden see a renewed interest in a lot of these different areas of energy, which is the purpose of the topic for tonight.
Yes.
And so I think it's an opportune time to be looking at stocks like this where they're touching these important levels, and just be ready is the point. And that's what I can see, a nice little setup there after going up for a couple of months there. We could see a little bit of a pullback in price in the short term from $6 before we know the direction. So I just, caution anyone who's looking at this, don't try to jump in early, just be patient and wait, because those in the know, they, could be encouraging people to get in because it is going up.
Yeah.
And then they short it down. So just watch that.
Did you want to add anything on this one?
Really good move to the upside in terms of the last major range. I can see all up and outside bars showing quite a bit of strength. My only concern right now is actually the volume side of things as well, and I think this is something that I've seen before on the prior chart as well. Once the stock bottomed out, actually it looks like the volume is heading down. So that's not adding a whole heap of conviction in there. But overall, I think it's I generally think it's a great stock. I agree with you. Can be quite volatile, but with good rules in play.
But look at the way it's unfolding right now.
It can provide a lot of opportunity, yeah.
Compared to how it's unfolded in previous rises, it's a totally different scenario, it looks like, at the moment. But like you said, because of the volatility, we just need to be able to confirm that.
Yeah.
So this could set up really nicely given the way that it's trended in the past.
So are you saying not just yet? What, if you are saying not yet, what do you want to see happen next?
I would like to see a bit of a pullback on the price. So going back to the weekly chart, I would like to probably see price come back to somewhere around $5. And then if you can consolidate and come back to around $5 level mark and start going up again, then I think it could provide a fantastic opportunity to re-enter.
All right, fantastic. Now, on that point, a lot of the techniques you do see in here, the trend lines, also the support and resistance, how to construct portfolios is all in this book, How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. So if you do want to get an introduction into all the things we do here, this is a perfect place to start. Again, just pay the shipping. Anyway, let's now move on actually, because later on in the show, we're going to dive into some more energy stocks that are primed for major moves. So stay tuned. We have saved a lot of the best ones till last. But now it is time to talk all things market trending this week. Janine.
All right, now markets erupted this week with interest over the proposed foreign takeover of energy giant Santos. There are some big names involved: Goldman Sachs, Rothschilds and JP Morgan. So the big question becomes, is the takeover a good deal for shareholders? One broker said, "We advise investors to switch to Woodside." Estimates are that each $10, that's US, per barrel move in the crude oil price, it equates to an approximately 40% change in Woodside's net profit. So really, right now is a question of whether this deal is priced correctly for shareholders and for new investors. whether it is a deal worth getting into. That's the big question.
Yeah, it is. I mean, obviously, Santos there was a proposal. Now, I don't know if that proposal was accepted. I have read in some articles that
the board are saying that they're accepting that deal.
Correct. Yep. And it was around $8.80.
$8.89.
Yep. And the share price is not far off that right now. But I mean,
well, it's a bit of a way off. But the reason for that is because the market is not convinced that it's actually going to go ahead.
Yeah.
So there are a number of people trying to play games here. So there's a bit of arbitrage there. In some schools they're saying, okay, take a trade in it now because if the takeover goes ahead, then there's potentially $1 in it or whatever, 80 cents in it. There's a premium in that if the deal goes ahead. Others are saying, no, it's going to get knocked on its head, and the way that you tell that is how far the price is actually trading versus what the offer price is, and that's significant at the moment. So, there's a lot of question marks over this deal right now. South Australian government put a clause into the legislation last year that actually allows them to veto deals. So that could be one thing that comes in. They get to have a say if it's not in the best interest of South Australians and for all Australia. But the FIRB is the body that then could knock it on its head because, there's security issues around our energy security. That's really important right now. We've heard that message throughout the election, the recent election.
Yeah.
So there's a lot of things that are weighing against it. But the really interesting thing to me are the big financial institutions that are pushing this deal. So, you've got the Goldman Sachs, the Rothschilds, the JP Morgans in there. So there's some serious playing going on here with this at the moment.
Yeah, I mean, we're going to get into the oil chart soon and measure that versus Santos. Also bring up a few alternates to see what is the best option, as this article mentioned. But just quickly on your view on things, if you're a current shareholder right now, because let's forget about future investment, what's the best play for a current shareholder right now, do you think? Just get rid of it or hold on?
That's a really important question, and I think it really depends on what your strategy was. So if you were in this short term, you might be happy to take some money off the table and take a bit of profit, given the risk that's there at the moment. But if you were more medium term in your outlook on what was going on in this area of the market, you might decide to hang on and wait and see, because there could be another offer from another company that comes out as a takeover for Santos. We know that Woodside had tried before. There's talk of whether Woodside could come back to the table or not. So there's still a lot of question marks on it. But the fact that the board have actually approved the deal often means that there's more of a chance of it going ahead, as long as the takeover, the FIRB don't knock it on its head. So I think for the moment, if you're worried about it, you would probably be best to take some money off the table. If you're happy to sit on it and you've got a more medium to longer term outlook, then you would stay with it and see what happens. But you have to be prepared that if the deal doesn't go ahead, that Santos's share price could come back. I mean, Santos has got a good story. We've seen, there's been plants. There's the production's coming online in 2026 and 2027 for gas, so that there's huge opportunity there for Santos. But the market is actually saying to take Woodside.
Yes.
Right? And so that's a question. Should investors actually take Woodside and just jump ship and jump into Woodside? I don't think it's that simple. It's just
or diversify between the two.
Well, there's a thought.
That could be an opportunity as well. Just going back on what you mentioned previously for Santos, I think as an investor, you really need to look what's your upside and downside in terms of what is your entry price on the stock and where did you get in and what is the potential premium upside that you can actually gain from this. What I found over the years as well is, generally speaking, when it comes to takeovers and corporate actions, first offer is always knocked back and it follows through by second or third offer on the table as well. So that could be something the investors need to consider as well. There might be more opportunity.
Well, we're going to talk about what the real upside potential is shortly, compare that to Woodside.
So as part of any negotiation, you never take the first offer. So that could be happening as well. I've just read an article earlier today. Treasury mentioned something along the lines that there could be that this deal is actually far from done. So it's the initial negotiations that are taking place, and it will take quite a bit of time actually for this to be finalized. So I wouldn't be surprised if it's knocked back and there's a counter bid that comes through.
Well, one thing's for sure, volatility is going to stay for the meantime. But let's go and have a look at that now. I know you guys were thinking, having a look at the oil price and measuring that versus Santos and giving a few alternates that look good right now also in this space.
Yeah, and I mean, I think one of the important things, Phil, is when you're looking at the chart here, is you can see that the Santos share price has been following that oil price largely, right? So when you see that and you think, well, is that price that they are offering worth what they're saying? You know, is that $8.89 the right price for Santos? And I actually measured the rise off the low from Santos, the rise off the low from Woodside, the rise off the low from the oil price, the rise off the low from some of the other energy stocks. They're all similar.
Yeah.
So this is an oil-driven rise. They can't claim that it's a 28% gain or whatever, the 30% gain or whatever they were claiming that it is, because it's less than that. It's definitely less than that because of what we've observed on all of the other stocks. And we've seen that move based on the oil price and the uncertainty that's going on at the moment that could give them a bit more of an upper hand. But so when we look at Santos, we know that historically for a long time it was trading sideways between around $8, I think it was $7 or $8, or around about the $8 mark, right? So if that price is what it was historically trading at before we saw all of this sell-off in the oil price and we saw the sell-off in the energy stocks, and now all the energy stocks are coming up, it's just coming back to what its value was. So this is where investors have to be a bit more savvy when they look at these offers and not be thinking, oh, they're saying it's a X percentage gain on the 30-day moving average. You know, that's
or
just
volume weighted index.
To me, that's just rubbish. It doesn't mean anything to an investor. So it's more about what's is it worth it to shareholders right now? Now, a lot of the fundamentals are suggesting that it is, and the board have said that it is. But you know, I view these with a bit of scepticism. I think that's healthy.
So on that point, there are alternates, as you mentioned earlier. Do you want to bring up those alternates you're thinking that could be the better offer right now?
Well, we've got to go to that argument, don't we, about Woodside and Santos. Should people jump ship, as we were talking about before, or should they put some into Woodside? And so on the screen here, we've got Woodside and another smaller stock, Viva Energy, which some of you have actually been asking us to have a look at recently, yes, which we're happy to oblige and talk about some of the stocks that you want us to talk about. So make sure that you email into us onto the show, and we're happy to discuss these ones. So VEA Energy Group, you can see it on the right. I've got the monthly chart there. Left-hand side, I've got the monthly chart of Woodside. Now, if we're looking at Woodside, we can see that it's crossed the downtrend now. So this is a really healthy move, and I'm just looking for my trend line there. So somewhere down here, you've got a trend line. We've seen this break above that line. Although we do have some resistance going back across here. Now, where you draw that exactly, there's a whole science that goes into working out where these strongest levels are, which you need to know how to do this. So because stocks often turn around these levels, or they turn just after they break through them and reverse back. So I wouldn't be surprised if Woodside has a bit of a breather and we see it come back below that line, but this could be the start of a number of months up. We know on the weekly chart, we've got a gap up here, somewhere around $32. There's a real potential that Woodside could come back. I've done a comparison with different stocks to have a look at what the upside potential is. As I said before, we know that the upside that we've seen off these stocks is really similar, all of them, with oil. So if we think that Woodside potentially could go up to around, you know, another 20%, is it reasonable to think that the oil price could go there? Is it reasonable to think that VEA could go 20% from where it is at the moment? And you look at these levels and you'd say that it is, because there's a really strong natural level way up here at around $2.50. It may go a little bit more because it's actually a bit more volatile than some of the bigger stocks. The question is, should you have your money in the bigger ones or the smaller ones? That really comes down to your risk appetite and that design of your portfolio that Phil was talking about before. When you read into the book, you'll learn more about how to build a portfolio properly, not just sort of collect strays, if you like, which a lot of people do into their portfolios. You've probably seen a few of those, Zoran.
Yeah, I have.
It's never really a straight answer. Obviously, it's horses for courses for what you're looking for to get. But if I can get a straight answer from both of you, VEA or Woodside at today's unfolding?
I'll go first because you've spoken quite a bit. I'll go with Woodside.
Yep. All right.
Look, I'm going to go with the little one. You'd be surprised by that, but I just think that it will have
It's
some...
not like you.
But you have to be prepared to set a decent stop loss.
Let me check the temperature. Yeah, all right. Yeah.
Yep, a bit hot today, sorry. Okay, but I think that this one could actually make the gains quicker than Woodside. That's really the point. You know, if you're into short term, that's good. If you're into more medium term, then Woodside. Medium to long term, it's more Woodside is the better pick. Yeah.
All right, great advice. Thank you very much. Now, time to get back into our topic for the night and reveal some more energy stocks that are showing massive signs of reversal. Now, Zoran, I'll get you to get into this one.
Sure.
Next stock on the list?
Bannerman Energy. I've actually never heard of this stock in the past myself, but we're going to start somewhere. Actually, like it. monthly chart. It doesn't look too bad. It looks like it actually had some hard time over the years, and it's starting to creep up again. So last price actually closed around 290. It's still got bit of upside to it, or at least until the most recent high, so another 57%. And this is what generally happens when you're actually looking at the stocks that are much cheaper in price, in nominal price, as opposed to those ones that are actually expensive. That if you do get into them and they run quite well, then you could actually make quite a hefty percentage margins on this. On the weekly chart, I also like the way it actually looks on weekly chart. So I think it's a good stock. I mean, I haven't done too much work on it, but overall, I think it's looking very positive, and there could be some good upside on this.
But I mean, does it get you, excited, if you will, for lack of a better term, when you're looking at a chart like this? Obviously, for a long time, just by looking at the chart, you don't need anything else, the bars, you see how small and illiquid to some degree they are for a long period as it's trawling through the bottom. Over the last couple of years, it's a completely different scenario. Yeah. There's more activity going into the stock. That surely means that things are turning the corner.
More. That's right. More interest. Fundamentally, probably companies looking much brighter. There might be some really good projects on the horizon as well. And on the back of that, obviously, there's quite a bit of interest in terms of volume. So. I agree with you. I think the personality has changed over the last couple of years, and we're actually seeing that reflected in the price. I mean, the price has been subdued sub $1 for quite a long period of time and consolidated for quite a long period of time. And I think I mentioned that on the show a couple of weeks ago. I actually like to see stocks do the full Dow's phase of the cycle and go through the ups and downs and consolidate the market bottom for a long period of time, because eventually when they start turning and gaining interest, it can actually provide a great opportunity as well. And not only that, it gives you a really good period of time to actually go and backtest the stock as well. And whilst you're backtesting, you can actually find a really solid strategy as well.
And this one has some decent gains on it at times, doesn't it?
Yes, and just for what Zoran's talking about, that is one of the techniques that is taught in the course, learning the phases of the market. So just to put some context to what you're saying there. But let's move on to the next stock, because there's more of these.
Yep, and it really helps you understand where stocks are. Like Yancoal is another one, isn't it? I mean, it's been consolidating sideways. And just looking at that, you can see that there's a really important level just underneath these lows here, which is where it's come back to. I guess because it's been spent so long sideways and it's really struggling, the risk right now is, will it actually come back to test that low here? And it could. You could say that it's already done the test and it's on its way, but we just need to see a bit of consolidation like we saw on Bannerman. Bannerman's already started that consolidation, which is great to see, because it sort of sets you up. You know where it potentially could come back to, and then you know where it could rise to, because that helps you build the picture. Well, what we're seeing now is a stock that's still under the angle of that trend. And for a volatile stock, it could rip through it and then rip all the way back down to $5.30. But then after settling down and proving itself, this thing could trade all the way back up to that high, which, there's some decent upside in it to the high, there's 20 odd % there. So for someone who's looking for a short-term opportunity, that could be one. Someone who's looking for a longer-term proposition might decide to wait until it gets through the top, the tops of this sideways consolidation to confirm that it's got, plenty of space to grow.
Yeah, that's a great point. All right, next stock.
Next stock is Horizon Oil.
Horizon Oil, yeah. I've actually traded this stock a very, very long time ago. Yeah, back in 2009. So it was actually kind of very liquid stock, very speculative stock, and by no means do I actually encourage anyone to do what I've done, but it led me to do the course, which is a positive, I guess. So you gotta start somewhere. But monthly chart looks actually really good. I really like monthly chart. My only concern is the weekly chart and the bars, which actually look very, very liquid. It looks like I would encourage anyone that wants to trade this or even consider to have a look at the volume on this stock and what is the weekly, daily, and monthly turnover, because getting into the stock might be okay, but if you wanna sell, they could provide a challenge, especially on the way weekly bars look.
It's deceiving, isn't it? Because if you look at that decline when it pulls back, that's 24% just in that little move, and it doesn't look it. But when you look at the right-hand side scale, then you can see it pretty quickly. So it really is mind-boggling when you think about some of these bigger falls that it's had, from these highs up here. Yeah. So it's just about knowing what it's done in the past, isn't it? That's what you're really saying.
But the monthly chart looks actually quite good. It's in a long-term uptrend. It's bottomed out. It looks like actually found a really good base as well, around 0.5 or a cent or something. So yeah, it is very speculative stock. And it's probably driven heavily on the news flow as well and the announcements.
Yeah, fantastic. All right. Another one?
Certainly do. ALD, this is Ampol. Now, Ampol is obviously a price taker, not a price maker. However, it is setting up nicely at the moment. We can see there's some previous support and resistance from these highs here and some of the lows, but see how it actually just dips through these levels and then returns above it again. Some stocks are more volatile than others, so people think, oh, well, is the strongest level here, and the strongest level may be down there for this stock at the moment. But on the rise, looking up at where it could go next, we can see that there's some resistance around $36, but that's a general, a nice decent run. If you can get in at the right time, there's 36% to that level up there. And the downtrend, even though it's been severe, looks actually quite nice. It's just stable. And same with the uptrend that it had prior to that. It doesn't do it justice when you look at that monthly chart. When you're looking at the last couple of years, it seems to be different. It seems to have changed a bit, and we could be seeing that setup unfolding right now, a bit of consolidation happening off the bottom. Just out of interest, let's have a look and see how far it rose off the bottom. So it's 39, 40%, sort of in the order of what we saw for other energy stocks. And this is why I say it's been a play by, we've got AI doing this now, so it's not uncommon to see the same sort of percentages off lows on the stocks in the same sector, which can actually be played to advantage when you're trading, because you might trade more than one, like Zoran said before, because they might do a very similar sort of thing as they go forward. So I just watch this consolidation and let's see where the stock goes from here, but I do like it.
Yeah, fantastic. I believe there's one more, Zoran. Take it away, mate.
One more. New Hope.
Yes.
No hope?
No hope. It's very similar playbook to the prior stock as well. And what I'm finding in general is actually a lot of stocks actually have a very similar sequence in terms of unfolding and how they're consolidating and gradually moving down before they actually kind of find the bottom. Overall, I would still say probably it's too early for this stock to actually even consider buying, especially from the all-time high in November 2022. I think we might have another leg down, to be honest, on this stock. At least it looks that way. This downtrend line has no momentum line, as Phil likes to call it, hasn't been actually broken. I would like the stock to actually find some really, really good support. And I think we might see a little bit further downside between the $3 and $3.50. If we can stay within that range and consolidate, then I would like to see it break that momentum or downtrend line and then consider even getting in. On weekly chart, it actually doesn't look too bad. There is actually signs of upside. There's a gap here. I would like to see that closed. This would provide a key trough or the low of $3.33. Anything below that price, anything below these levels, if price was to actually continue to go down, there would be an alarm bell for me.
Yes. Yeah. All right. Now, given we've gone through a few really good stocks, some okay, what are your best picks in the energy space moving forward?
Janine?
He's going to say ladies first. Look, I do like ALD. If we come back and have a look at that chart, I think that there's potential upside on ALD. I thought that Bannerman looked interesting as well. That was another one I liked. But Whitehaven Coal also looks good.
That's not bad. Pick one and you've given me three. That's perfect. Zoran,
just one.
One, please.
I'll go with two, actually.
Okay.
So
sure.
I'll go with Woodside and I'll go with Bannerman as well.
Fantastic. All right, we've got agreements. Now, if you want these skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. Moving on, shortly, we have an amazing hot stock tip this week coming from Zoran, so stay tuned. But first, let's answer your questions. Sandeep writes, just curious on your thoughts on Iran-Israel war and the impact on lithium and gas stocks as a result. Now, I mean, let's cover this, obviously, in a bit more detail because we've touched on it. The Iran-Israel war, obviously, yes, oil is rising, gold is also moving. In terms of what it means for lithium and gas?
Well, I mean, I think even though we were talking about oil, we're talking about gas
basically,
as well.
Yeah.
And so we can see that there are opportunities for these gas stocks, Santos, Woodside, and some of the smaller ones that are coming up. That could really change things for them, and especially if there's been a change, with Iran, which there has in terms of the stability in the region, and if the supply gets cut off, or some of the supply gets cut off, which they're suggesting could occur, if they close the Strait of, do you want to pronounce it?
I can't remember the name, but a lot of
Strait of Hormuz, something like that.
Yeah. Well, it's over 20. It's over 20% of the world's supply moves through that strait, and all it takes is a few drones to shut that off, and then you've got a real supply-demand problem.
Yeah,
that's why Iran is such a big elephant in the room. They're also on the OPEC board, so they do have
they're one of the actually biggest producers, suppliers of oil in the OPEC group.
Massive influence.
So, yeah, they've got a big market cap in terms of chunk of saying of how much is actually disposed. And I know like OPEC in the past, over the past few weeks or months, has actually increased the supply in the market, and it was actually led predominantly by Saudis.
Yes.
And I think there is a bit of a politics behind that. Obviously, we've seen Trump go to Saudis a few weeks ago. So I feel like this has been cooking on for months now. And, the big wigs or the big heads knew all about it, and therefore they're actually trying to back probably Iran in a corner. And I'm not taking any political views here, but, if this continues and escalates further, then it's only natural to think that it's going to provide a lot of concern for supply in the market and demand, and therefore probably crude oil is going to, both Brent and crude is probably likely to continue going up, as well as gas.
Yeah.
So get ready to pay more at the Bowser is really what he's
China is the biggest consumer of crude oil globally, and if you can't actually get the oil through to them, then obviously if they go around South Africa and take different routes, it's going to take them double the time or triple the time, which is obviously add another layer of concern as well. Yes.
Yes, all right. Well, next is Craig, who writes, would you please share your thoughts on Stockland? I believe it has recently broken a significant previous high and has retested that level on the weekly chart. I'm not in it yet, but I'm considering entering above $5.72 with a tighter than usual stop loss below $5.40. All right, Janine, I can see you're touching the chart there.
Yeah, look, it looks interesting, doesn't it? Yeah, we've had a breakout of Stockland. There's heaps of upside to that all-time high. But like he rightly said, it has broken out, but it's just been trading sideways for so many weeks. So it's almost looking like it wants to come back and test this $5.20 or $5.10 or whatever he thinks. And I think that he's pretty spot on, really, in terms of his view on it. If we just have a look at the angle of the trend going up, it has accelerated. The rise has accelerated. It doesn't want to play ball with me today. And you can see there that it's been this rhythm of going up and coming back to the angle of this trend, and it's continuing to do it. So there's nothing here to say otherwise, that it may actually do the same thing again.
I know.
But to me, the bigger question is obviously his stop loss at 540. He's got a tighter than usual stop loss. Is that too tight? Because
well, it really depends on the term of his trading, how long he's trading.
What was the entry again?
Just above the high, I believe, and the stop was at 540, which is near that recent low.
572.
Well, 572, yes, the top. So you'd be entering at 573, and he's got the stop at 540, which is
low.
At that low, which is 5.5%.
5.6%.
To
me, that's a little tight. I'm just going to throw it out there, but
I think I agree with Phil. I think here is a little bit time. Sometimes you got to give stocks a bit of time to actually breathe as well and consolidate, and especially after that quite a punchy move that he went from the lows in March 2025. So we've seen a strong run. It's consolidating. You want to give it a bit of more breathing space, and then if he starts going up and goes above the 573, then I think he's in a solid trade.
Can I just add, unless
his
he's
rules,
really short term,
and he's back tested it, and his rules say that's what works.
That begs the question: is he trading a CFD also, or is he trading actually a physical stock as well? So
at the end of the day, one thing I think we can all agree on: the risk is much higher the tighter you go on the stop loss. So up to you.
And I think Craig has picked a great stock.
Yeah, right.
I think it's a fantastic stock.
Well, there you have it. Good stuff, Craig. Sean now writes, do you guys put your stop losses on the trading platform like CommSec or E-Trade, or do you physically write it down, then put a sell in the market when the share trades at your predetermined written stop down price? I've read that if you place a stop in the market, the institutional investors see it and manipulate the market to grab your shares. All right, now, I'm going to go to you on this because this is the boogeyman question that everyone talks about.
Elephant in the room.
Please just explain that there is no boogeyman.
I love when people ask me this question, and I actually never hold against them, primarily because they go on these forums and they read a whole heap of information of brokers stopping them and reversing, big institutions coming in and stuff. I always say there's two thoughts on this one. So let's go one step back. As a retail trader, I think there's a lot of advantages that you can have in the market. First thing first, you can pretty much enter and exit the market at any point in time because you're not actually trading enormous amount of flows or volume. As an institution or big hedge fund or whoever it is, broker, bank, you actually don't have that. Luxury, and you're also probably more skewed towards limited amount of stocks that you can actually trade as well. So I'll just put it out there. So Nick, retail versus institutional.
I believe it was Sean.
Sean, my apologies. Yeah. I think there's a lot of advantages for the retail side of trading. Now, going on to the next question, which is, I've had them many times, and I'm sure you guys have as well, where you enter the stock, price goes, towards you, stops you out, and then it reverses. It's actually very natural market flows. I work very, very closely in a brokerage firm that I'm at, Blueberry Markets, and I sit next to a guy who's the head of dealing desk and head of operations or risk or whatever you want to call it, and he manages billions of dollars on daily basis. It's actually about managing the books internally. It's got nothing to do with actually taking clients out and actually stopping them out because we don't have that. We don't have the availability. We don't have the luxury. Well, and it's just the nature of the beast of the flow. Now, big institute. If we are talking about big banks or JP Morgans or huge institutions, they might have that luxury of pushing the price in a certain direction. They might do. But that's where it comes down to you as a trader and basically seeing where do you put your stop losses and how do you manage your positions.
But, at the end of the day, even if you are large institutions trading, most of their trading is not on market. These big orders are happening off market in dark pools, these big positions. It's not,
market closes, dark pools, yes.
Right. So for me, the real question is, if you are, what about the trades that you do succeed on? Do they not want to take, because if you've done 10 trades and the winning trades they happen that day that they don't want to take your stops.
Yeah.
At the end of the day, the broker is, as you know, responsible for executing the trade. You know, they get paid the commission for the trade to go through. They're not physically trading themselves. Yes, there is the booking clients, but when you talk, let's just say the FX market, you've got 6 trillion moving throughout the day.
It's the biggest market in the world. You literally, even if you do want to manipulate that, you gotta have so much flow and so much market exposure to push in a certain direction that it's abnormal. It's enormous market.
All for a $500 stop.
Yes.
Yeah.
For
Anyway.
a retail trader. So, but I do get his concern because there's a lot of that stigma out in the market or on the forums, and generally what I say is people will use anything to point fingers and not take a blame for not succeeding in the market, and not in the market but generally in life as well. So yeah,
I would add just if it's causing concern, the best place to look is look where you're placing your stop. That's where the answer really comes from. Analyse your work, analyse your stop, and find out why that is happening more so than the boogeyman coming to get you. But anyway, Nick now writes, could you take a detailed look at Karoon Energy? From what I'm seeing, it's broken a long-term downward trend line, and the next significant resistance level appears to be around 37% above the current price. How far do you think this run could be in the next bull phase? I'm particularly interested in your thoughts on potential longer-term price projections and whether this setup aligns with the types of moves we often see at the early stages of a new trend. All right, now, Janine, I like the fact that he wants a longer projection. That's nice.
It is nice, and it's great to hear this discussion about looking ahead and seeing what are the signs when the stock turns. It has all the markings of stock turning. If we just look at the chart, we can see on this monthly chart, I'm going to bring this across here a little bit so we can expand it up. But this is what we often talk about on the show, and you know, there's some important techniques that we teach that allow you to understand the significance of that. So we can see that there was a trend line in place, there was a test here. It's so important to have a written trading plan that actually checks off some of these things. Now, people don't tend to have written trading plans, and that's another part of doing a course, a proper course that teaches you the right way and gives you that structure that often is lacking in most traders out there. Even really good traders might be doing well. We've had some great traders who come to us and say, look, I'm coming to you because I just want some structure, because I know that if the market's not running and I'm not using structure, then I'm going to just go the wrong way.
Yeah.
And so this is where you get the structure and understanding how stocks unfold and being able to tick these things off. But to me, this looks like there's significant upside. Where that upside is to, on a stock like this, really because of the volatility, there's so many levels here we're talking about. I mean, just to this next high, we look at there's 35% upside just to the high. And that's not even getting above that high yet into the territory that it hasn't crossed for a couple of, at least a decade, which is really important for the stock. And so then we start to look at levels like the all-time high and say, well, could it get back up to that high? It definitely could. We can see some resistance somewhere around here, and this could be the next level it gets to. So there's some really good upside in this stock. But what that also does is that line tells you when not to be in it. Which is really important too.
I think the big thing here is, yes, it's fine to project out long term, but you know, there's also that thing where you look at a chart like this and you think, okay, it's trading near the all-time lows. I'm going to fixate my mind on the all-time high just because it's been there before. Yeah. And as you know, as a trader, that can be so detrimental because you've got this wild
dreams and aspirations
on whether
the price is going to go there, but it might take years before it gets there.
Well,
and along the way, there's going to be so many hurdles and ups and downs.
Well, that's why we teach people how in our module that talks about price, it's not just, oh, there's some natural levels there. It's how to work out where are the biggest levels.
Where's the
clusters? Turn this stock. That's the thing.
And that coincides in how to then structure the trade so that you're planning for a realistic outcome, and then if it doesn't, working out how to cover that and protect it and move on with taking a profitable trade out. So there's a lot more than goes out to just looking at a long-term projection and hoping that it's going to go back to the old.
Well, I was talking to someone who was doing this work the other day, and he said that before he was with services, and he really has a really good job, but he wants to retire at some point. So he discussed how before he came on board to do our course, he had no idea that he could do this and how it all worked. And it just seemed like, almost like something that was way out into the future. But now he's doing it, and he can really see that in a few years' time that he's got his, his why, he's got his goals, and he knows where he's headed.
I think that's a common thing for even all of us, The first time we looked at this stuff, it was so eye-opening because it was nowhere out there at the time we were looking at it for sure.
Well, you get a broker saying, oh, this stock is worth whatever. It could go up 10, 15% or something. At least then you've got the knowledge to be able to check what's being said. You're not just being led.
Yes, you make your own decisions. Take control, basically.
Yeah.
All right, let's...
I'll just go one step back because I've actually traded this stock in the past and I've done a lot of back testing, so I'm not quite sure whether the student is actually with us or whether he's actually potentially going to be, a wealth within student. But I'll say one thing, this stock, I would encourage you to backtest on trend lines.
Yep.
Because it's worked really, really well on trend lines.
Well,
that's all I'm going to say.
There you go.
I'll keep it short and sharp.
Free tip from Zoran, so take note of that for sure. Now, Jules writes, over the last few months, I've been looking at platinum as a potential play given that silver is starting to run. The main player on the ASX that I've been following is Zim. I was waiting for price to trade above a long-term monthly downtrend, which it has now, but I am hoping that it will pull back so that I can enter a short to medium-term play. It's a more volatile stock, so I will have more lenient stop loss in play at 11.55. All right, Zoran, so platinum, short to medium-term play with a bit of a lenient stop.
So in general, platinum has been outperforming the market actually really, really well. There's quite a lot of demand from China at the moment, and Chinese are the biggest imports of platinum across the globe, and producers as well. So I've been following the price because I've had some clients actually trade it over the past few weeks. Looking at the stock, we can see that this monthly bar is obviously provided quite a lot of upside at the moment, but if you're having a look at the close, it's actually around midpoint. So that $15 seems to be a fair value at the moment on monthly chart, and it's broken through a long-term downtrend as well. So, the change of trend might be imminent at the moment. And I would also overlay this chart with platinum in general, the spot price or the futures price.
So did you say, just so I can understand this one better, did you say that platinum the metal itself has actually turned a corner, and this has turned a corner at the same time?
Yes.
Yeah.
And platinum is actually appreciated. I think it's around $1,250 USD dollars at the moment, and it's probably one of the best performing commodities at the moment. Metals. Yes.
Interesting.
Excellent. All right. Now we do have Brian's email next. He says, I've gotten into EOS recently at $1.50. It's flying now at over $2.70. I owe a thank you to Adrian for his hot stock tip. Now, I'm not sure who Adrian is on the team here, but one of us gave him the hot stock tip, which is, there you go, watch the show. You get good tips like that. My question now is around getting out of the stock. How would it work out? How would you work this out? Would you buy more now? I look at charts, but it's more from ComSec, still learning. All right. Now, isn't this the, I guess, question that you don't want to be asking when you are buying stocks, but here we are, we're asking it, he's bought it. What do I do on the way out? And we know the money is made when you sell. Please be gentle.
Why do you think I'm going to be hard on this one? But I was actually going to ask you a question. Why is this such a really important question? You raised that.
Because to realise a profit, it's when you push that sell button. That's the only time.
Okay, now I get where you're coming from.
Yeah, that is the only time you can really realise your work. Or
everything else is a noise.
Everything else is paper returns until that final button is pushed. And the hardest thing in trading is to know when to sell. Anyone can buy. So
what you're saying is he doesn't know what he's going to do, and he should have worked that out before he got into the trade. Is that what you're saying?
Absolutely.
Yeah.
Yeah.
Yeah, look, I mean, this is common, isn't it? We find that all the time.
Not for our students, but
no, because
it's common.
they already have a plan that they can trust, that they can fall back on. So they can trade with everything that they know, or they can trade with a black and white strategy that gives you freedom. So looking at the stock on this chart, you can see that big rise up we've had And this is called a blow-off, isn't it? When we see these sort of moves happen, we see a massive
It's called beautiful,
rise.
that's what it is.
Yep, I mean, we're talking it went up to 77, it's now 70%. I'd be first thinking about the liquidity of the stock. How big is it? You know, like, do we want to leave the trade on the table right now? What has it done in the past when it pulls back? How far does it actually fall when it comes back? There's a whole lot of questions to understand. See, there's 25% pullback before it actually comes back to actually then check that high again by moving up again. So if the stock did a similar sort of thing, it could do it. We may get an opportunity to get out of it, but it may not be until it comes back to somewhere around $2.18. So this is the realism that you have to think about, and that just coincides with that support level that's on the stock that was a resistance level in March 2024, up around this $2.20. So knowing that there's some downside risk here on the stock, do you take part of your position? I would wait for some sort of exit on the stock. Now, whether it's the back-tested exit, the first exit that appears, could be an exit on your daily chart. The thing you have to understand with any exit that you choose to take, if you don't take the back-tested exit, your psychology has to be okay with that. You know, if it doesn't turn out to be the best outcome. So this stock could rocket up another 50%. It's
But that's the
possible.
point. That's the point. It goes back to before you got in. What do you want out of this trade? Is this a short-term trade? Because if it's a short-term play, then there is reason potentially to get out at these levels. But is it more of a medium to long-term play? Are you looking for growth over the next 5-10 years? Yep. Why have you bought this?
Well, he still has to wait for an exit, which there isn't one. Not even on the daily chart at this point. So it's about waiting for that exit and trusting that it comes. But how do you trust something when you haven't actually tested it properly to know what the best strategy is?
Or you don't even, you're not sure how to sell, period. But anyway, I think a great thing to do would be to get that book as a starter. That'll give you some good tips on how to get that process started. If you want to get more in depth, then please go visit the website and get into one of our courses. That'll answer that question for you, definitely. Anyway, now time for our hot stock tip for the week, Zoran, which is?
CSL.
All right.
Yeah.
Cool.
Good stock. Top 20 in ASX, huge market cap. Fundamentally, over the past 24 hours, it's come out with FDA approval from the US.
Yes.
In terms of the one of the drugs being approved. So US Food and Drug Administration approved CSL's Andembry, the only prophylactic, I can't even...
They've thrown you under the bus here,
yeah,
mate.
HAE treatment targeting factor 7A with once monthly dosing for all patients from the start. So just to basically, I've done better reading on this one. It's a rare disease that's out there. I think one in 50,000 people can actually get it. And they've actually been FDA approved to actually get the drug out on the market because it can help those individuals, which is always a nice thing. So the price is actually spiked initially on the back of that 0.6% today. However, it's actually still hovering down on monthly chart. It's not adding any conviction. And if anything, I'd be probably defending this major support level around $230. Break below these levels could provide a lot more downside, unfortunately. And this is the actual key trough here. So the level of $230.39. So look, this could turn things around on, given the news, but I would still pay a lot of attention to the actual monthly and weekly chart. On weekly as well, whilst the price has actually appreciated somewhat and reached a most recent high around $251, it actually couldn't hold around these levels and looks like we've got actually more selling coming through. So I don't believe this chart is incorporating today's price, today's move, which should be slightly up. But if you are looking to actually trade that, then you got to look at least these levels here around 251 for the price to actually consolidate, break that high, and then hopefully there is actually a little bit more upside. But right now, it's looking fairly bearish. It's defending some key support levels. Overall, fundamentally though, great stock. So as what you mentioned, guys, previously, if you're looking for income in terms of the dividend yield, above market average yield, and looking for a long-term solution, then it's a really, really good play. But short-term, I'm not so convinced that we'll get much upside.
Yep.
What's the upside potential? I'm just looking at it. It appears to be, just so we can see how far it could go if it gets going. Somewhere around here, what is that, 290? 16% or something.
But I think it would take a bit of time actually for the price to reach that 290. I don't think it would actually happen overnight, especially looking at the short-term bar analysis on the chart and the way stock has actually moved in the past. But again, I'm not discounting it. I think there could be a lot more upside. Maybe things will change, turn around for stock. It's been consolidating for a very long period of time. So if you have a look at it from an all-time high back in 2020, it's actually held quite well, to be honest, over the years. But now whether this is a distribution at the market top or just a sideways consolidation, it's probably too early to tell.
Fantastic. All right. Well, if you want more hot stock picks from us, check out our video, Iran-Israel War, 3 ASX oil stocks to win big in market crash.